Welcome to FX Street. If you like what we're talking about, head over to YouTube, join our channel by hitting that subscribe button. You can follow Akash and I individually at just myself at Just Analysis One over here, and Akash at Mangyeko Zero. Taking a look at Dogecoin. So let's just take a look quick at what Doge did. So last Tuesday, and then we had Wednesday, Thursday, Friday. Doge moved up. Where are we at? Here we are. Over 50%, 50.2%. And then ultimately on Friday, it closed, rejected at the top of the cloud, closed below the bottom of the cloud. Like this is just rude price action. This is just mean. It went up for a 50% move between Tuesday and the close on and the high on Friday. Then it closed up only 28%. That's only 28%. But after being up 50%, that's kind of ugly. All right, so that's that. Um, from the uh, from the high of Friday to the current close, it's down 23.3%. Or if we just want to look at from Friday's close to where we are now, it's down, almost 11%. So Doge, the breakout above the falling wedge was not unexpected. It was something that we've been looking at. And what we could be witnessing here is just a test of that breakout. So, it's returned into a ideal bearish Ichimoku breakout within the Ichimoku system, which is, it's a very bearish looking setup in Ichimoku, but also it's not that ugly either from a structure perspective, because it could just be testing the falling wedge trend line that it broke out of before it wants to move higher, which would make sense. I mean, that would fulfill. Actually, it already does fulfill an inverse head and shoulders pattern. If that's something you're looking for. Trade idea that we looked at last week is still open, active, and running. This is the first column of O's. This is the first pullback since Dogecoin converted back into a bull market on the point and figure chart. And that is in point figure analysis, that is viewed as a sign of strength. So all this looks like to me is just a test of the breakout on the candlestick chart and the first pullback from the breakout of the conversion into a bull market on the point and figure chart. So I don't really see a ton of further downside risks here, even though any move and any, what am I saying? Between 15 and 16 cents, there is a very, 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 very dangerous. It's a dangerous level to be sitting at between 16 cents and lower, where there could be a very quick imminent flash crash down to that 9 and 8 cent zone because of how thin the volume profile is back here. So you're just kind of gambling with your position if it's sitting at 16. If really anywhere below 16 cents, it's just a danger zone. But that's what I see for Doge. I don't know what you see, Akash.
Thank you, John. So again, to address this massive spike that we saw here on 14 Jan was because of Elon Musk again, kind of similar to what happened here on 13 December. Was kind of a little optimistic and was hoping for Doge to close above this weekly resistance level here, 0.194, but it didn't happen, and now it's retracing all the way down to the weekly support level here at 163, 0.163. There is a chance it could come down to 0.15 and consolidate here for quite some time. Kind of similar to what's happening with Bitcoin, Ethereum, and XRP is what's happening with Doge, which is it's not showing a lot of volatility. And I believe that's going to continue. That trend is going to continue. And as you can see here, the weekly resistance has been a formidable level for the past 2 months, approximately 2 months. Because the price has gotten rejected here for the last 3 times. And it was a good support level here back in September. So That said, the consolidation is going to continue at least until we see like a weekly close above 0.22. And even beyond that, right, we have this 3-day demand zone here, which ranges from 0.294 to 0.447, which is acting as a massive hurdle. And so basically, the upside is capped at 0.29, and if we're being a little optimistic, it would be 0.34. The downside, I see it. There's a good chance it'll come down towards this December 4th crash swing low here at 0.128. And like John mentioned, if we kind of close below these levels here, although 0.12 is an intermediate level between 0.15 and the 9 cent level here. So if we do get a close below 1.128, there could be a scenario where Doge crashes all the way down to 0.9 cent target, because not only the volume profile is very thin here, but we do have a massive price inefficiency that was seen when price actually shot up in April 2021. So that's my take on Dogecoin.
Thank you, Akash, and thank you everybody for watching. Please don't forget to like, comment, and subscribe.